Hey, what's up everybody? This is Ferris Saleem, the founder of Trade with Tex. I've been getting a lot of requests for more examples using Fibonacci retracements and how to use them for day trades and swing trades. So I figured I'd put out another video regarding fibs and how exactly you can use them for your entry and exit points. Okay, now before we actually jump into Fibonacci retracements, I want to just state one thing right off the bat here, and it's that this is just a part of the system. All right, personally, to give you more of an idea of what I'm talking about, I use Fibonacci retracements, I use pivots, I use trend analysis, I use breakout patterns, breakdown patterns in order to find my trades and execute, right? So when you're using fibs, you need another part to the system in order to actually place the trade, okay? But today I'm going to show you how to draw them up and how exactly you should play it based off of those key levels that you're given. Okay, now we're going to be using Tesla as an example. We called this out in the chat room. If you guys are familiar with the stock, you're probably familiar with the recent drop. They had a lot of negative headlines, and personally, I didn't play it on the bounce back here. We did call it out in the chat room, as I just mentioned, but I'm a trend trader. So as I was saying, it has to be a part of your specific investment style. When I trade, I like going with the trend because I like a higher probability of winning, right? Higher consistency. That's what I focus on. Now, specifically for Tesla, if we zoom it out a little bit, you can see that ever since we lost this area of support, we've recently just dipped down into a pretty aggressive bearish trend here, right? We have that flush, we pop back up, that's a lower swing high, so the trend is definitely shifting to bearish. And before, you know, it was barely bullish for the breakdown and the bad news. Okay, so naturally for me, I like to watch this on the short side so I can see where the best possible entry point is. Okay, so the first step of actually using fibs as your entry and exit points are to draw them, right? Simple as that. So let's draw them up real quick. And again, I'll remind you guys, if you don't know how to draw Fibonacci retracements, that's fine. It's actually not that difficult. I'm going to do it quickly here. But again, there is a video I've done in the past on how to use Fibonacci retracements, exactly what they are, and it goes in a detailed step-by-step method of drawing them with multiple examples. Okay, now, if we look at the Tesla drop, it's kind of tricky to know where to draw your fibs from because, you know, we have this little area right here, that little swing high or whatever that candlestick is, this drop off, then we have this low, this high. It's kind of tricky, right, overall. But easiest way to do it, if you're not very good at reading the trend, is to just identify the most recent swing high with a line chart, right? So you can switch this over to line chart. Personally, I like to just do this. Draw a line to the chart. Right, and you can see this is a swing low, this is a swing high, swing low, swing high, swing low, swing high. And the easy way to identify them, again, I used this in the past video, is just by drawing that line chart and then circling the V's, right? The V's, whether they're upside down or facing normally. Okay, so in this case scenario, again, you have your V right here. V, 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 and V right there. Okay, so this would be your swing high that you're going to use for your starting drawing point on your Fibonacci retracements, because again, we're looking at this area right here for some kind of level to short the stock based off of. Okay, after the drop, after the recovery, we're looking for some kind of resistance level. Okay, now if we just zoom this out real quick, I want to show you one last time. This is the daily chart, so it's the 1 year, 1 day. And to clarify again, we're using this for a short-term trade, but more specifically what we're doing is drawing these fibs based off of bigger key levels, right? It's a bigger time frame so that we can execute a short-term trade. Okay, the bigger the time frame, the more meaningful the key level. The bigger the time frame, the bigger the move, right? That's the more common saying. So that's why we're using this chart. Okay, now, again, using that little V technique, we've identified that swing high right there, and we can start drawing our fibs. And the easy way to remember is left to right. Okay, so this is in TD Thinkorswim. Again, we're using the daily chart. It's a free platform, by the way. You go down to drawing tools, hit that little percentage because we're looking at Fibonacci retracements. They're in percentages. Click that guy, and we're drawing it from left to right, so from swing high to swing low. Okay, so we click right on this high, and then drop it down to this low. Okay, now a lot of people, actually this is a very common mistake, and I'll just mention this briefly. A lot of people think of the 100% and the 0% fibs as your key levels. But in reality, that's just a high and low for the period that you're looking at. All right, so the big key levels are the ones in between. That's Fibonacci 101. Okay, now for this, since we're looking at really precise numbers, right? If you understand the calculations of these retracements, you know that they go out to multiple decimal points here. So if we look at this high, right, if you just hover over the candlestick and you look right here under H, right, it'll tell you the high for the period. That's 347.21, and we can double click the fibs and edit it. Okay, it was pretty simple. Again, all I did there was double click the fibs, edit the number so we have the exact number in order to avoid offsetting these at all. Okay, now we go to the low and do the same exact thing. All right, so instead of looking under H, you're just going to look under L. For that candlestick, the low is 244.59. Okay, now one thing I like to do, guys, and it's really just how I base all of my trades, or the majority of them when I use fibs, is I really like to highlight these middle levels, especially the most important one. And the most important ratio, for those of you that don't know, is 0.618. All right, the 61.8% fib right there. That's your most important level. By far out of the other ones, this one is going to give you a reversal, or at least the highest chance of a reversal. And it's really easy because typically, right when we cross over that 50% line, 61.8% is just waiting for it, and it'll knock it back down. And these are the two most important levels, so 50 and 61. But the 61.8 is usually where we catch that reversal. Okay, now if we're looking at this Tesla chart, again, what I like to do is highlight them. So I'll double click them again, and I'll go down to 0.618, and I'll put it in a noteworthy color. Right, so I'll put it in, let's say, green, and then I'll put in the 0.5, so the 50%, in yellow. Now, notice what I did, guys. I didn't highlight any other ones. I just used the 61.8% and the 50%, and it's pretty simple. Right, if I'm intending to short off of the 61.8% fib, then my first target is going to be the fib right under that. And of course, the one right under that is 50%. Okay, so that's my first target there. Now, Tesla, if we look at this chart, bounced up, and initially it did get rejected at this fib right here, the first one. All right, then it powered through it and immediately filled that gap. All right, very strong chart here off the lows. And you could tell, right, it's probably showing this much momentum either because of the markets or because it's short heavy. And in this case scenario, obviously, it's very heavily shorted. Right, you could just look at the volume, and if you recall the negative headlines from a couple weeks back. Okay, but what we're looking for here is the short opportunity. So let's zoom it in a little bit closer, and you can see, right, we did hit the 61.8% fib, and we did come back down to the 50% fib, actually multiple times. But we use the daily chart to draw our fibs. We don't actually use this to execute. So in this case scenario, what we're going to do is we just need to take it down to a time frame where we can see both this high and this low and get a better read on the text. Okay, because remember what I was saying, the fibs are just a piece of the puzzle here. They're just a piece of your system. The rest of it comes together from other technical indicators, fundamentals, whatever you want to weigh into it, right? It's your trading style, okay? But a really common one, as I'm sure a lot of you guys know, is the RSI. All right, it's a super common technical indicator. So what we're going to do is we're going to throw an RSI on this chart, the relative strength index, and just get a very basic reading. Okay, and to do that, for those of you who are not used to this platform, just go to Studies, Edit Studies, type in RSI into this little bar, double click, and apply it. And I have default settings that look a little bit different, so yours is probably going to show up with different colors, but don't be worried, it's the same technical indicator. All right, now all we've done here is we've kept our fibs up and we added the RSI. And remember, what we need to do here is take it to a short-term time frame to get a read from the RSI so we can see whether or not it's overbought and whether or not we should short, because it's a simple checklist, right? You need to have your key level being hit, and then you need to also have some kind of indication that it's overextended, right? We can't just be shorting things because they're green. We have to have some kind of system there, okay? So again, the first step was to draw the fibs. We did that. All right, it's not really a step, but something to note. You do need to have other technical indicators in order to take the trade, right? You need to have some kind of short-term signal. So we added the RSI. All right, now the second step is to take it to a time frame where we can see both the 100% and the 0% fibs. Okay, so change the time frame. Now I'm going to change it from the 1 year, 1 day to the 20-day, 1 hour. All right, because this was within, the past 20, 25 days. And you can see it's barely out of view, right? But the bottom line is we just want to get a technical read right here from the bounce from the low. Okay, so if you look at this chart, you can see we bounced pretty aggressively in a short period of time. So we're pretty likely to be oversold. Now, keep in mind, guys, right, the oversold reading on the RSI is, overbought. I misspoke, overbought. The overbought reading is plus 70, right? Anything with an RSI value over 70 shows that it's overbought. Oversold is minus 30, all right? And obviously the middle level is 50. That's about even, okay? And you can see right here, it turns red when it surpasses 70, showing that it's overbought. So in this case scenario, Tesla was actually overbought right there, and it was hitting a key fib. But again, we don't just short because something's green. We need it to actually hit the level that we want. Okay, in this case scenario, it's a 61.8%. All right, actually, I'm going to make this one a little bit thicker too to give you an even better read on this chart. All right, so this green, I'm going to toss it to a width of 3, and there we go. It's a little bit bolder. So you can see Tesla jumped up to that key level, hit it, and immediately dropped back down to the 50% fib. Now, that's great to talk about, but we need to make sure that we had an overbought reading when it hit that key fib, right? And if we draw this up, you can see right here the RSI reading. All right, I'll just highlight it. And just before we tap that key level, it signaled that it was overbought, overextended. We can short it. Okay, now notice this worked out immediately, right? This worked out immediately. And that's why I was saying, the trades are going to be from 1 to 5 days. They could happen within that day. It really just depends on how long it takes the stock to get to your target. Now, Tesla had momentum, right? Mistaken for a good thing. Momentum can mean up or down. It doesn't matter which direction. It's just fairly volatile, right? So in this case scenario, since Tesla's a hot stock and since it's fairly volatile, it moved in 1 day, less than a day actually, to our target. And you can see it did it 2 more times, right? So jumped up, hit it, came down and hit the target. Jumped up, hit it, came down and hit the target. Hit it, came down and hit the target. But out of all these trades, this is the one that we're taking because that's what had the RSI reading that matched up with it. Okay, so Tesla here, we can actually zoom it in a little bit more. I think we'll still be able to get it in the view. Yeah, this was the signal right here. You can see that horrible reaction. Look at the reversal candlestick to that key level. Oh God, that's as ugly as my ex-girlfriend right there. That is bad. That is really bad. And we dropped down, made a nice little bounce back up, and then eventually hit the target. Okay, so this happened in 1 day. A lot of you who trade options, this is great for you. This is a game changer. Using that 61.8% fib, regardless of the time frame, right, is amazing. I mean, it gives you 1 to 3 day trades. You don't really have to hold that long. You can have a decent spread on it as well if you want to manage risk in a different manner. But for the most part, right, in this case scenario, Tesla, that is a 13-point price swing in 1 day. And those of you who trade options probably know that a 13-point price swing on Tesla is a huge percentage gain. I'm not talking 10 or 20%. I'm talking 200, 300%. Right? Probably even more, depending on what the options were priced at. Okay, so again, Tesla, a 13-point gain on that trade. Nice and simple. If you use common stock, still a decent amount of profit there, but again, nice and simple. So the basic steps here, guys, let's do it one more time. We took it out to the daily chart, and we needed to draw our fibs here. Obviously, that's the first step. So we drew them up by using the swing high and the swing low of the move that we were looking at. All right. And the simple trick to that is just drawing those V's, as I mentioned, to identify the swing highs and swing lows. Trend traders, that should be really easy for you to read that trend and just identify the swing highs and swing lows. Okay. Number 2 was to take it on a short-term time frame. Not only to get a better view of the short-term chart and where your potential entry should be and how it should be timed, but mainly to just get another technical reading on it. Okay. And then last but not least, right, it's not a step that you have to write out, just execute properly if it does give you that buy signal or sell signal. Okay, so in this case for Tesla, it gave us the sell signal at 308.01. We took it to the 5-day just to better see that. Actually, I think we took it to the 5-day 15-minute. All right, there was your signal, and there was our target. Move there took a few hours, but a big payday. And again, it did do it a second time and a third time, but that's breaking your rules if you're trading it then, because it did not have the overbought reading from the RSI. Okay, now a reminder, guys, to wrap this up. So showed you how to draw them, very simple. And if you are still confused, I realize this is a little bit more advanced. Feel free to go back and watch the other webinar on YouTube. Okay, but the big reminder here is to combine a key level with other technical indicators. You can't just have one of them. You can't just short at some key fib because you think it's important. It has to be the 61.8% fib, whether it's for a short or whether it's for a buy. And again, in this case, you actually could buy puts and play it in the opposite direction, take advantage of the downside. And then we combined it with the RSI. Now, a lot of people use moving averages. A lot of people use relative volume. Whatever you want to use, that's fine. It works with any trading system. And it should help out your profits big time. Okay, so if you guys have any questions, feel free to leave them in the comments section below. If you like the video, subscribe, like it. I'll be putting more out, especially about fibs, because that's mainly what we use in our chat room. And speaking of the chat room, if you are interested in joining for alerts and then 2 webinars a week, day in and day out, we talk stocks, ETFs, futures, options, Forex, everything. Then feel free to click the link below, tradewithtex.com. We do have a free week trial, and it's only $50 a month if you want the alerts as well. Okay, so hope you guys enjoyed it. Have a good day, and again, any questions, feel free to leave them below. Take it easy, everybody.